Do you dream of retiring in your 40s or even your 30s while your friends are still working 9 to 5? That's the power of FIRE. Financial independence, retire early.
But here's the question. What should you actually invest in if you want to retire early? This video breaks it all down, step by step. First, let's get clear on what FIRE is and why it's different from traditional retirement. Traditional retirement waits until 65. FIRE aims for 10, 20, even 30 years earlier. The formula? Save aggressively, invest smartly, and cut years off your working life. But remember, FIRE isn't about deprivation. It's about freedom and choices. Now, let's talk about where your money should go. The backbone of any FIRE strategy is low-cost index funds. Why? Because they give you instant diversification at minimal cost. So, think of it as buying the entire U.S. economy in one simple move. But FIRE investors, as a fact, don't just stop at index funds. In fact, many add real estate to create steady rental income, while others include dividend-paying stocks for cash flow. So the goal is, build a portfolio that works harder than you do. But here's a reality check. FIRE takes discipline. Most successful FIRE followers save around 50 to 70% of their income. I know that's intense, but it's what shrinks decades of work into a few short years. And here's the payoff: financial freedom, while you're still young. Now let's dive deeper. What exactly should you buy if FIRE is your goal? We'll cover index funds, ETFs, real estate, bonds, and more. And I'll show you how to balance growth, safety, and cash flow. So, stay with me, because your path to early retirement starts right here. Before we dive into what to buy, let's look at how a typical FIRE portfolio is structured. You generally split your investments across stocks, real estate, bonds, and cash. Stocks provide growth, real estate gives cash flow, and bonds smooth volatility. Cash acts as a safety net, so you never have to sell assets in a downturn. The exact mix depends on your risk tolerance and retirement timeline. You might lean heavier into stocks if you're younger, or more into bonds as you approach early retirement. But whatever your mix, consistency is the key to compounding wealth. Even small monthly investments can snowball into financial independence. Next, let's examine the first core investment category: index funds. These funds track major markets, giving you instant diversification. Because of low fees, broad exposure, and historically strong returns, with the right foundation, FIRE investing becomes a clear, manageable plan. All right, let's get into the actual investments that fuel FIRE. The first, and most important, are index funds. These funds track major markets like the S&P 500, giving you broad exposure. Actually, low-cost, diversified, and historically strong performers. Next, exchange-traded funds, or ETFs. Think of ETFs as index funds with flexibility. You can buy or sell them anytime. Many FIRE investors use ETFs for global diversification. It's a way to own both U.S. and international growth in one portfolio. But FIRE portfolios rarely stop at stocks alone. Real estate is the second engine of FIRE, especially rental properties. Why? Because rental income pays you every single month. And unlike stocks, rents don't disappear in a market crash. Then there are dividend stocks, shares of companies that pay you to own them. Imagine building a portfolio where quarterly checks arrive, no matter what. These stocks give you stability and cash flow, critical for FIRE. Examples: blue-chip companies like P&G, J&J, or Coca-Cola. But FIRE portfolios also mix in some safe assets, like bonds. Bonds don't make you rich, but they smooth the ride when markets get bumpy. Think of them as shock absorbers for your investments. FIRE mix might be 70% stocks, 20% real estate, 10% bonds. And don't forget, cash is also a compulsory part of the plan. It covers emergencies so you don't have to sell investments in a panic. So now you know what to buy. But how do you structure it? That's where strategy comes in. Let's break it down next. Together, they create growth, stability, and cash flow. That's the core recipe for building your FIRE portfolio. But the question is, how do you actually balance these pieces? Do you go all in on stocks or create a hybrid portfolio? Let's break down the FIRE portfolio strategies next. Okay, so you know the building blocks. Now let's talk strategy. There's no single FIRE portfolio. Instead, there are styles. The first is lean FIRE, living frugally, needing less money. This works if you're willing to live minimally and retire faster. Next is fat FIRE, retiring early with a comfortable lifestyle. It takes more savings, but gives you freedom and comfort. Then there's barista FIRE, a hybrid approach. You reach semi-retirement, cover basics with part-time income, and let investments grow. Finally, coast FIRE, save aggressively early, then let compounding do the rest. After a certain point, your money grows itself, so you can relax. Each style has pros and cons, depending on your goals. So, how do we put this into real numbers? Let's say you're 30 years old, earning $70,000 after tax. You save 50% of that, so $35,000 per year. You invest in a 70-20-10 split, stocks, real estate, bonds. So let's assume an average of 7% annual return over 20 years. That means by age 50, you'd have around $1.5 million invested. At a 4% safe withdrawal rate, that's $60,000 per year. Enough to retire early, if your lifestyle fits within it. But what if you aim for fat FIRE instead? Maybe you want $100,000 a year in retirement income. That means you'd need around $2.5 million saved. It might take a few more years, but it buys freedom with luxury. Again, FIRE isn't one size fits all, it's customizable. The strategy depends on your risk tolerance and lifestyle goals. And the earlier you start, the easier compounding works for you. Even small amounts invested early can snowball. So ask yourself, what FIRE path excites you the most? Minimalist, luxurious, or balanced? It's your choice. The key is designing your portfolio around your vision. That's why FIRE isn't just about money, it's about freedom. And your portfolio is simply the tool to get there. So let's talk about the benefits and the risks you should know. Because FIRE isn't perfect, it requires trade-offs. Some people thrive, others burn out. Here's what you need to weigh before diving in. So, what are the real benefits of pursuing FIRE? The biggest one, freedom over your time. Imagine choosing what to work on, rather than being forced to. Second, lower stress from financial security. When you know your bills are covered by investments, life feels lighter. Third, the ability to design your lifestyle on your terms. Some people use FIRE to travel, others to spend more time with family. But every coin has two sides. FIRE comes with real risks and limitations. Number one, the math can be harder in high-cost cities. Needs might eat up more than 50% of your budget. That leaves less room for savings unless you make big trade-offs. Risk 2, market volatility. A bad recession early in retirement could hurt your portfolio. That's why many FIRE investors keep extra safety margins. Risk 3. Burnout from extreme frugality. If you cut too much, you may resent the lifestyle. FIRE should feel freeing, not like punishment. So, how do you make FIRE realistic for you? Tip 1. Start by tracking every single dollar for at least a month. This reveals your real spending habits, not just guesses. Tip 2. Aim to save 30 to 50% of your income, even if it's gradual. Start small, but keep pushing your savings rate higher. Tip 3. Automate your investments. Set it and forget it, so you don't rely on willpower. Tip 4. Build multiple income streams. The more ways money flows in, the faster you hit FIRE. Tip 5. Don't neglect lifestyle planning. Ask yourself now, what do I actually want early retirement to look like? Because FIRE isn't just about money, it's about purpose. Money buys time, but you must know what to do with it. Otherwise, you may reach FIRE, but feel lost. So, combine the math with meaning. Build a portfolio, but also a vision. That's how FIRE becomes sustainable. Next, let's wrap this up with a call to action. We've covered the core of FIRE: mindset, strategies, risks, and tips. But here's the truth. FIRE is not about retiring to do nothing. It's about choosing how you spend your time on your terms. That's real financial independence. So, where do you start today? Step 1. Track your expenses. Step 2. Increase your savings rate, bit by bit. Step 3. Invest consistently in diversified assets. And Step 4. Design your ideal lifestyle vision. Because money without purpose is just numbers. But money with meaning, that's freedom. And freedom is what FIRE is really about. The journey won't be easy. It takes discipline, patience, and resilience. But every step brings you closer to control over your time. And that's the most valuable asset you'll ever own. So, ask yourself, what does freedom look like to you? Is it travel, creativity, or more time with loved ones? Define it, write it down, make it real. Then use FIRE as the tool to get there. If today inspired you, don't stop here. Join our channel Grow Fi for deeper dives into investing, saving, and financial freedom. And share this video with someone who dreams of retiring early. Because knowledge grows when it's shared. If you're ready to start your FIRE journey, take that first step today. Track your expenses, invest in your future, and protect your freedom. Because one day, you'll look back and thank yourself. The best time to start was yesterday. The second best time is today. So, let's build wealth, freedom, and purpose together. This is Grow Fi, your partner to financial freedom. Thanks for watching.